Hello, friends, and welcome back to Market Shares. I'm your host, Tony Blodgett, and today I thought I would talk a little bit about what's going on at the CFPB, or more like what's going on to the CFPB, because there's been quite a drastic change in the CFPB over the last month and a half or so. And I got to say, this probably shouldn't be that surprising, because if you were at all following what was going on with the rhetoric around the CFPB, even during the election cycle, mostly from Elon Musk, who we now know is heading up Doge and really involved with the current administration, he talked very openly about the fact that he felt the CFPB was almost an unnecessary agency, and that a lot of the work that they did was just redundant to what the states do. So we're going to talk a little bit about that. I'm going to start with an article that I was reading that was really shocking, and then I'm going to talk about what the implications of all this might be. So just a little bit ago, Thursday, February 27th, the CFPB dismissed 4 major lawsuits that they had going on. One with Capital One, who was accused of bilking customers for over $2 billion in interest. One with a Berkshire Hathaway company, Vanderbilt Mortgage, operating as Rocket Homes Real Estate, who was being accused of illegal kickbacks to real estate agents. There was the Pennsylvania Higher Education Assistance Agency, which is a servicer and was being accused of improperly collecting on loans. And then there was a TransUnion lawsuit that had to do with them violating a 2017 rule about marketing their credit tools to consumers. These are 4 major lawsuits. And in the article, it said insiders at the CFPB are saying, well, this is probably just the first of many others that would likely be dismissed. Now, what's really interesting about this is all this has happened since the current director, which is Russell Vought, was brought in. I believe he's the interim director, replacing Rohit Chopra, who was the CFPB director under the previous administration. But what's really interesting about this announcement that came out on February 27th is it was during the confirmation hearings going on for Jonathan McKernan, who is expected to be the long-term CFPB director under, who was recommended by the Trump administration. So kind of interesting timing there. Here you are testifying about how important it is to have an agency and run an agency that is all about consumer protection, while dismissing 4 significant lawsuits that were pending, all of which are accusing these companies of doing things that have an impact negatively on customers, consumers, and the like, right? So it's very interesting. Now, it's kind of surprising to me that the CFPB has become such a political thing. Now, if you remember, the CFPB was formed after the Dodd-Frank Act went through. I think that was in 2010, if I remember correctly. And that called for the formation of the CFPB. Now, it is an interesting agency within the government because of the way that it reports up and its accountability. It kind of has infinite power to do what it is that it sees fit in order to protect the consumer. And I'll be honest with you, when the CFPB was first formulated, it was a little scary for those of us in the mortgage business. And not because we necessarily were doing things wrong, although obviously there's bad actors in all industries, and ours is no different from that. But it was a little scary because there was just not a lot of clarity as to the regulations that they expected you to adhere to. And they kind of had this policy of regulation through enforcement. So you would just watch some other company get nailed by the CFPB and you'd be like, oh, okay, well, I guess that is something that we shouldn't be doing. Now, some of this stuff is obvious, but not all of it was. Now, I got to say, though, from my personal experience being in this industry for now almost 30 years, I feel like the CFPB has done a pretty good job over the last few years, a number of years really, of changing that, and no longer just being an agency who just does enforcement and then says, hey, look at what we, busted other people for. Now you know what we're looking for. And they've been a lot more proactive. Their website's gotten a lot better. They provide a lot of information on there that clarifies, what they feel like are the policies and procedures that finance and mortgage companies and all the different entities that they oversee should be following. So it really has evolved over time, but I think one of the really strong arguments against the CFPB is really that it's a redundant agency. And what do I mean by that? Well, every state has their own regulatory process, right? Every state has an enforcement, division within their, whoever they're, like in Washington, where I live, it's the Washington State Department of Financial Institutions, and they conduct audits, and, they have an enforcement division, obviously, if someone's violating those, and every state has their version of that. And so the argument is that, this is just another federal layer that's really unchecked. It's really unnecessary. That's what you heard Elon Musk talk about even before Trump was elected. And clearly, they feel strongly enough about this that they're moving forward. Now, I don't know. Here's the reality is that every state's not the same. And I don't know that every company gets treated the same by every state, right? I mean, we all know how this works. There could be other things about that company in a particular state that, they don't want to be as firm on them, or they don't want them to leave their state, for instance. I mean, who knows what the reasons could be. But I would think that having this additional layer of oversight is going to really make sure the bad actors stay in line. And I think that's the concern that a lot of people have. And I got to be honest with you, I share that concern. Being at a company who's had multiple audits from the CFPB, and let's be honest, they tend to target larger organizations because, well, they do have deeper pockets. And if if they're looking for things that you might have done wrong, they're going to spend their time both with the companies who have the ability to pay for them. You're paying for them to come in and audit you. And secondly, if they find something that you've been doing wrong, and bigger companies have a larger impact, right? They deal with more customers. And so if you're doing something wrong, it's probably hurting more people. So I understand from that perspective why they target larger companies. But, we've been through our fair share of CFPB audits, and they've all gone very well. But, I would say from a business perspective, it can be a nuisance, but, aren't all, aren't all audits, not the funnest thing to go through, right? And it's just part of the mortgage business. And for those people that are good actors and do it right, you kind of welcome it at the end of the day. You have a department, they handle that. You make sure that your policies, your procedures are clear and concise, and your people are following those. And, you can't watch everybody every day. So you have training policies that you document, and you make sure that your employees know how to follow those, and you're doing the right things. You're not making business decisions that are focused on growing your sales teams without including your compliance department in those discussions, right? Things like that, just best practices that we've all adopted over the years as compliance and consumer protection have been at the forefront. And so my concern is that what happens when people feel like it's going to be unchecked. Now, I'm going to be honest with you. I don't think it's going to go unchecked. I do know that some of these state regulators are quite thorough, and they're going to find the stuff. They're going to find the bad actors. But it's more the attitude, right? It's the idea that the CFPB isn't enforcing anymore. Because in addition to dismissing these 4 lawsuits and saying that there's more to come, and just for clarity purposes, prior to the current director Vaught being in charge, there was only 1 dismissal in the history of the CFPB that did not result in some sort of a finding that, brought in revenue for the customer. Okay. So these were dismissed with prejudice and no further action taken. Everything else that had been dismissed had some sort of a settlement assigned to that, with the exception of one, to give you an idea. And to further clarify how much they plan on, winding back the CFPB, they've also terminated over 200 of its employees and asked the ones that are still there to essentially stop working, which is just really odd. But to essentially stop working. So, is there a possibility that a new director would come in and, they just want to kind of hit pause on everything they have going now and then take keep the CFPB as a viable entity and keep it moving forward, doing what it's doing, but maybe with a different take? I don't know. I suppose that's possible, but it's certainly not what you heard from at least Elon Musk. When he talked about it, he said this should just be shut down. And a number of other, I've watched plenty of podcasts and different discussions about this, because when I hear someone talking about the CFPB, I'm like, what's going on? I want to hear what's going on. So, but it does really, for me, it gives me a lot of concern. Not necessarily just because I think the CFPB needs to be there to police all finance industries. That's debatable, and that's not my concern. And maybe it is needed. I don't know. But what I guess what I'm really concerned about is this idea that people feel like it's the Wild West. And we do know exactly what happens when that's the environment of an entire industry. When everybody thinks that no one's watching, when everyone thinks that there's no repercussions for the decisions that they make, we see very bad things happen. We saw it, in the mortgage industry leading up to the Great Recession. Because of, toxic loan products that were allowed to be given to people. This idea you could give a negative amortizing loan to a customer without them understanding what they were getting into, that would adjust every single month, and they had a prepayment penalty they couldn't get out of for 3 years or 5 years. You couldn't do that today, right? That's illegal to do that today. So what happens when, there's this general feeling by organizations that we're not going to get caught even if we do the things that are illegal. And it usually starts small, right? It starts with a small overstep, and then it just kind of snowballs. And so it does concern me, because there's a lot of companies out there that, regardless of what happens with the CFPB, they have practices in place to do the right thing. They do business in all 50 states. When you do that, you better be prepared for the states that have very strict oversight. New York comes to mind, California comes to mind, Washington State, right? There's other ones. I don't know all of them. Nevada, right? There's states that have their certain things that they look at very closely. And when you have that large of a footprint, well, you're probably going to follow the rules, because even if you're not worried about the CFPB moving forward, you're worried about everybody else. But think about the smaller companies, that are really kind of under the radar, and now they have this general feeling that, hey, no one's looking. Now, obviously, people are looking, but all it takes is this idea that we can push the envelope and not get caught. That really starts. It really starts a snowball effect, because when one company starts doing it and then another company goes, well, my competitor's doing it, so maybe it's okay if I do it. And then pretty soon it's like, well, everybody in the industry does it. This is normal practice. And that's how things evolve over time. So, what I wonder is, if the CFPB truly does get shut down, what's going to be the mechanism across not just our industry, because it's payday loans, it's student loans, there's a lot of other industries besides mortgage finance that fall under the CFPB. What's going to be the thing that makes everyone follow the rules? I don't know the answer to that, but I do know that when companies or industries feel like there is no enforcement, there is no rules, I do know that things go off the rails. And the reality is historically when that's happened, the companies can benefit financially, substantially sometimes, and the customer is usually the one to get hurt. So this idea of a consumer protection agency sounds like a good one to me. Now, can we argue about how this CFPB was ran and the amount of control that they had and the lack of oversight that they had? I mean, I think all those things are debatable, and I'm frankly not well versed enough to give my opinion on those things. But I can see from my perspective that if this agency gets shut down, it's going to have, and I think at this point, it essentially feels like it's shut down. I mean, dismissing all their cases and telling their people not to work, I think it's already creating a general attitude of, companies can be a little more brazen right now. And I think you're going to absolutely see that. And then what does that look like as we fast forward in time? So I just wanted to bring this to everyone's attention. I would say this is that I hope that at this point, those of us, at least in the mortgage industry, and because that's what I'm in, and we can speak to that, is that I hope that whether the CFPB gets reinvigorated through a new director and rolls out kind of a new stance on things, or if it goes away completely, I think it's important that we continue to follow the principles that we know are important in this industry. And I wouldn't suggest anybody changing anything. And if you're working at an organization or you're in a position where conversations are being had about how we're going to do certain business practices moving forward, and the idea even comes up, it's like, well, I mean, CFPB is not, they're not going to enforce it, right? That's a bad way. That's a bad way to look at things. And I encourage, everybody to stand up for what's right. And for those that are in a position of influence within their organization, or if you even work at an organization and you're like, this doesn't feel right. And I wonder if this decision's being made because there's a feeling like, we're not going to get caught or no one's watching what we're doing. I encourage you to say something because I think we all know when we're allowing things to happen within our organizations that might not be good for customers. And it doesn't matter if you're the person making the decision or you're just a person that's carrying out the task. It really doesn't matter. I think back to around 2008, 2009. I had a friend of mine, someone who wanted to get in the mortgage business and shared with me that they wanted to be in the mortgage business. And at the time, I didn't have a position that I could hire them for. So they went to go work for another mortgage company. And turns out that mortgage company's primary job, the primary product that they sold was that product I just mentioned, the negative amortizing ARM with a prepayment penalty. And they were getting people to refinance out of their 30-year fixed rate mortgages to get this super low negative amortization payment. And they gave them a script. They did not even explain to these loan officers, these salespeople, like how the product worked. They just gave them a script and they said, call these people and offer them, a significantly lower mortgage payment than they're paying now. And it was predatory. Let's just be honest. It was predatory. And I remember this gentleman called me up and he goes, look, I know that you didn't have a position for me, but I really wanted to get in the mortgage business. I went to go work for this other company and I've only been there for a little bit of time, but I'm really concerned. And I said, what do you mean? He goes, well, I'm really concerned with the product that we're selling. And he goes, can I meet with you? And I said, sure. And he actually swung by my office and we sat down and he showed me, the product that he was selling. And I said, well, that's a negative amortizing ARM. He goes, what does that mean? And I explained to him, just like back then when we all had access to that product, I explained that to my customer and I explained to him how it worked and how the negative amortization worked and how the interest was calculated monthly. It could change monthly, but the payment might not correlate with the interest rate and how it worked and the prepayment penalty. And he almost started crying. in my office, and was heartbroken that he was, pushing this product to his clients. And he immediately quit his job and I think went to go work for, a more reputable mortgage company once he figured it out. But that story comes to mind because, we know he knew he was doing something wrong. Now, I don't blame him. He didn't know enough about the mortgage industry to know even how that product worked, but at least he sought out the advice of someone who he thought could, help him understand it. And once he understood it, he took action. And that's the kind of feeling that I think we all have inside of us. We know when we're doing something that isn't right for the consumer. And I encourage you to be that kind of person. Our industry needs that to not go away. And if nothing else, whether you love the CFPB or you hate the CFPB, you can't deny that having this agency in place since, probably around 2010 or soon thereafter, it's changed the way that companies, think and operate. And I have to believe that if that goes away, that also is going to change the way that companies think and operate, and probably not for the better. And so it's up to us as the people that are in the industry to, speak up and, make sure that we maintain a culture of compliance and consumer protection, regardless of whether we think someone's looking over our shoulder, because it's just the right thing to do. So those are my thoughts on this. And look, this story is not over, you guys. There's more to come with what's going to happen with the CFPB. And I don't know what's going to happen. I'm hopeful that a new director, gets in there and they don't shut it down. Maybe there could be some revisions made. Like I said, I don't know enough about the inner workings to really speak intelligently about that. But I do feel like having somebody watching out for the consumer, as long as it's done in a way that is clear and concise with the policies, and they're clear on how they are going to do the enforcements and the audits. And, you got to have rules to follow in order to follow those rules. And so I don't like when the CFPB or any agency, which, they did this early on, doesn't tell you what to do and then just comes in and fines you when they think you did something wrong with no clarity. So as long as there's clarity and we all know the rules of the road and everybody's following those rules, yeah, if you get audited and you're not following them, there should be penalties for that. Of course, that's reasonable. So I'm hopeful that something like that happens, but time will tell. And in the meantime, I hope that you and your companies and the people and the circles that you hang out in and the conversations you have in this industry, I hope they don't start leaning towards, hey, there's no sheriff in town, so I guess we can do what we want. That would be a horrible thing, not just for our industry, but for the customers that we serve. So that's my thought for today, you guys. Thank you, as always, for watching Market Shares. Look, we're trying to grow this channel. So if you enjoy the content, I know a lot of you watch this, but you might not be subscribed. It really does help if you subscribe. So subscribe to the channel and maybe give a like or a comment down below. Obviously, you guys know how this works. That helps our channel get more reach out there, which we're trying to do. And I promise you, as we go through 2025, we'll keep giving you market updates. We'll keep giving you updates on big things that are happening within the mortgage and real estate space. And we'll have obviously some great interviews that we have lined up, bringing people in that you can have a peek into what's happening in their life and hopefully learn something along the way. So with that, you guys, enjoy your time. I'll see you on our next episode, which, as you know, drops every single Friday at 10 a.m. Pacific time. And until then, take care.